Ladies and gentlemen, good day and welcome to the KPI Green Energy Limited Q4 FY26 earnings conference call hosted by Share India Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. I now hand the conference over to Mr. Harsh Patel from Share India Securities. Thank you, and over to you, Harsh.
Thank you. Good morning, everyone. I would like to congratulate the management on very good set of numbers on behalf of Share India Securities. I welcome you all for Q4 FY26 earnings conference call of KPI Green Energy. We are pleased to have with us the management team represented by Mr. Sohil Dobaya, the Whole-time Director, Dr. Alok Das, Group CEO, Mr. Salim Yahoo, Chief Financial Officer of the company. We will have the opening remarks from the management followed by question and answer session. Thank you, and over to you, Vinod.
Okay. Thank you. Good morning, everyone. Myself, Vinod Jain, Head Investor Relations. On behalf of management team, I would like to extend a very warm welcome to all our investors, shareholders, and other participants for today's earnings call for Q4 and FY25-26 for KPI Green Energy. Joining us on the call are Whole-time Director, Group CEO, and CFO, who have already been introduced. They will take us through the financial and the operational performance for the quarter and year. Let me tell you that financial year 25-26 has been another strong and excellent year for the company with robust operational and financial performance. As committed during the year, we reported strong growth on top line, EBITDA, PAT, and cash profit, which will be detailed by our CFO, Mr. Salim Yahoo. During the year, we secured several strategic project wins across solar, wind, BESS, emerging segments like floating solar, and the power sharing license from the CRC, while continuing to strengthen our long-term IPP portfolio and power evacuation infrastructure. At KP Green, we remain committed to building an integrated renewable energy platform with strong execution capability, technology-led operation, and long-term value creation for all the stakeholders. Now, I would like to hand over the call to Mr. Salim Yahoo for the financial and operational overview. Thank you, and over to Mr. Salim Yahoo.
Good morning, everyone. On behalf of KPI Green Energy Limited, I extend a warm welcome to all our investors, analysts, shareholders, and participants joining us today for the earnings conference call for the quarter and financial year ended March 31st, 2026. I hope all of you have had the opportunity to go through our audited financial results and the investor presentation uploaded on the stock exchange. FY25-26 has been another landmark year for KPI Green Energy Limited. The company has delivered strong growth across all key financial and operational parameters, supported by continued execution strength, a diversified renewable portfolio, and a clear focus on building long-term sustainable value. Our journey over the past 5 years reflects the strength and scalability of our business model. During this period, our compounded growth has been remarkable with 92% CAGR in sales and 104% CAGR in profit. This demonstrates that KPI Green is well aligned with India's renewable energy requirement and is consistently creating sustainable value for shareholders. Over the last 3 years, we have built not just projects, but strong momentum. Our total assets have grown more than double every year, rising from 2,436 crore in FY24 to 4,792 crores in FY25, and further reaching 9,882 crore this year in FY26. This growth reflects our disciplined investment in renewable assets, land evacuation infrastructure, and execution capabilities. Moving to the financial performance, for FY26, total income stood at 2,742 crores as compared to 1,755 crores in FY25, registering a strong growth of 56% year-on-year. Earning before interest, tax, and depreciation increased to rupees 1,006 crores as compared to 581 crores in FY25, reflecting growth of 73%. Profit after tax stood at rupees 509 crores as compared to 325 crores in FY25, registering growth of 57% YOY. For quarter F4 FY26, total income stood at rupees 810 crores. Earning before interest, tax, and depreciation stood at 305 crores and PAT stood at 155 crores. This reflects strong momentum in the closing quarter of the year and demonstrates our ability to execute at scale while maintaining profitability. Our balance sheet has also strengthened significantly. Net worth increased to rupees 3,273 crores in FY26 from rupees 2,630 crores in FY25, while as fixed assets grew to rupees 5,427 crores, reflecting our continued investment in renewable energy assets and future growth capacity. Cash flow from operation activities improved to rupees 424 crores in FY26 compared to 208 crores in FY25. Moving on to operational and portfolios. On the operational front, KPI Green continued to scale its renewable portfolio across both IPP and CPP segment. As on March 31, 2026, our installed capacity stood at over 1.62 gigawatt, with work in progress capacity of over 4.64 gigawatt. Our installed plus upcoming portfolio has reached approximately 6.26 gigawatt, comprising 2.57 gigawatt under IPP segment and 3.69 gigawatt under CPP segment. Our expanding IPP portfolio is expected to generate more than 390 crore units annually, strengthening the company's recurring revenue base and improving long-term visibility of earnings. With long tenor PPAs, strong execution capabilities, and integrated project development expertise, we are building a platform that combines growth with predictable cash flows. During the year, we secured several important project wins across solar, wind, floating solar, green hydrogen, and battery energy storage. This includes 150 megawatt wind project with GUNL, 445/890 megawatt hertz standalone BESS project, again 120 megawatt 240 megawatt hertz standalone BESS project, 142 megawatt floating solar project, 250 megawatt solar project from SGVN, 1.13 gigawatt solar battery balance of plant project from Adani Group, and 300 megawatt wind project from SGVN. On the financial segment, sustainable financial milestone that we have achieved, one of the defining milestone for us was the successful listing of India's first externally credit enhanced green bond. This was rupees 670 crores 5-year instrument carrying 8.50 coupon rate with quarterly amortization backed by a 65% partial guarantee from Guaranto, which is an international private infrastructure development group. The instrument was rated AA+ CE by CRISIL and ICRA. This innovative structure broadened our investor base among long tenor domestic institutions and set a new benchmark for sustainable finance in India. More importantly, it reinforces the market confidence in KPI Green's business model, governance standards, and renewable growth platform. We are pleased to highlight that KPI Green has received both interstate trading license from CERC and intra-state trading license from GERC. This enables us to participate in pan-India power market exchange and bilateral contracts, thereby creating wider market access, better realization opportunities, and enhanced portfolio flexibility. Looking ahead, our focus remains on strengthening the IPP portfolio, expanding the CPP businesses, and building capabilities in future growth segments such as battery energy storage system, green hydrogen, floating solar, offshore wind, pump storage, and energy trading. Our strategy is to build an integrated renewable energy platform with strong execution capabilities, predictable annuity revenue, and long-term value creation for all the stakeholders. As India accelerates its renewable energy transition, KPI Green is well positioned to contribute meaningfully through scale, execution, innovation, and disciplined financial management. We remain committed to timely execution, strong governance, sustainable growth, and consistent value creation for all our stakeholders. I thank you for all the support that has been provided by all our stakeholders. With this, I would like to thank all our shareholders also, lenders, customers, employees, partners, regulators for their continuous trust and support. I now request the moderator to open the floor for question and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aditya Pandya from Vyom. Please go ahead.
Hi, Dean. I'm audible.
You're not sounding that clear, Mr. Pandya.
Hi, am I audible now?
Yes, please go ahead.
Yes. Congratulations for the great set of numbers. My
Thank you.
question was towards one of our subsidiaries, Sunbrook Energia. We are also a stakeholders in that company. Wanted to get some idea on the H2 numbers and Q4 numbers, and also what is the status of the DRC filing and the eventual listing?
Thank you, Aditya, for the compliment. Speaking about Sundrop, which is a subsidiary of KPI at present, and the top line of Sundrop this year was 586 crores, which was a substantial growth, with a PBT of 130 crores and a PAT of 97 crores. With respect to the IPO of Sundrop, Sundrop has been, we are going to do all the battery energy storage system. That is the best, which is an upcoming segment. That segment is being dedicated to Sundrop. So Sundrop will be coming up shortly with filing of DRHP for the IPO, with the object of battery energy storage system, along with the battery energy manufacturing also is in line with us. So shortly you'll see the interaction in this particular company more, and growth also is there on the top line. As you have seen, this year we have grown again substantially. Next year also we have a substantial target of growing this company going forward.
Understood. I think I missed the part where I think you didn't mention the timeline for listing.
This year as we told, no? This financial year we'll be doing the listing for Sundrop.
Understood. Okay. Thank you.
Thank you. The next question is from the line of Shrenik Mehta from Indo Arts Wealth. Please go ahead.
Hi. My question is about overall IPP strategy. So FY26, you saw revenue growth of almost 56% and profit growth of 57%. But the EPS has grown only 49% and the stock has derated. Now our interest cost is up almost 130% to 182 crores against the IPP contribution, which is only 9%. So you have almost 1.6 gigawatt of IP energies over FY27 and 28 that will come up. So what will be the peak interest burden that the P&L will absorb, and at what point of time do you expect this IPP PAT to cross the interest plus the depreciation and the dilution lag? So the question is largely that when does this transition become EPS accretive rather than EPS dilutive on a per share basis?
Yeah. Thank you, Shane. And I think if I summarize your question, you want to understand when is the break-even going to happen and when we'll see the positive impact on the financial from the IPP segment, right?
Yeah, and also the peak interest burden, what we'll have.
Yes. Yeah. See, first of all, let me just explain you the interest cost, why it has increased. If you see last year we had, done an QIP, because of which, we have repaid some portion of our long-term loans and short-term loans, because of which the interest cost in the last year was seen very less compared to this year. This year we have added more capacity. We have started 250 megawatt, 370 megawatt, and then also Khavda 240 megawatt. So IPP is a segment which, it's a capex burden, so automatically the interest cost has increased this year. Now the peak interest cost approximately would be at around 300 odd crore. But if you see the initial phase, when you see the business when it starts, the IPP segment comes in a phase-wise manner. So if you first see that, out of this 1 gigawatt, you'll find 250, then 3, another 250 coming up over a period of time. So the revenue will start coming in. So FY27-28 is where we will see the full year operation of this IPP, what we have taken in hand, and then you will see the within that stability period will also go. So you will find that majority of the thing, whereas the break even of any IPP project would be around 6 to 7 years, but you will see a strong cash flow coming from FY27-28 in the IPP segment.
Okay. So we can expect that the ROE of the company will continue to decline even until FY28.
Not decline. Again, I am telling you, we are doing it in a phase-wise manner. So if you have the PPA that we have signed with the government institutions like GUNL, there we have a clause that we can set up the plants in the batches of 25 megawatt, 50 megawatt. So the revenue also starts coming up. So what happens is that, it also reduces my interest cost. So automatically it's fine that it will not be that much burden in the construction phase also, because while constructing the other portion of the plant, some portion will automatically start generating revenue. So though maybe the COD of that will be in the end of 27, but before that, 50-60% of the plant is already started generating revenue. So you'll see a mixed, impact on the financial. We will not see too much of, impact of interest or, too much of impact of other costs. But at the same time, there will be also revenue which will come up. But yes, the exact, the impact will come only in 27, 28 when the entire plant is done and we start seeing the revenue flowing in.
Yeah, and that is probably the reason why the stock has been underperforming. So, your ROC has been dropping almost from 18-19% to around 13-14%, and probably from what you're explaining, it may further drop in the next 1 or 2 years before it starts to climb up.
Not 1 or 2 years, I think, most probably this year we'll have little bit, we will curtail the drop this year itself, and next year we'll see again ROE coming back to the earlier levels. That is what we are targeting.
Okay. All right. Thank you.
Thank you.
Thank you. The next question is from the line of Ayush Sharma, an individual investor. Please go ahead.
Yeah, hi. So my question is on the this evacuation. So in FY24, the evacuation was 1.6 gigawatt, and in FY25 it decreased to approximately 3.26 gigawatt, which is 100% decrease YOY. But this year the evacuation has only increased to 3.56, which is 10% of the previous year. What is the reason which we are seeing that only very less increase in the YOY evacuation overall?
Ayush, your question we are not able to understand exactly. What you are looking at in FY25, you are saying 3.9 gigawatt, right? As per the presentation.
3.26. Yeah, FY25 it was 3.26. You can just open the presentation of the last year, same quarter.
June, the evacuation portion you are talking about, right?
Yeah, evacuation. And this year it has increased to 3.59%.
Yes.
3.59 gigawatt, which is 10%.
Yeah. See, evacuation, there is a process of evacuation getting approval or getting the evacuation in your kitty. The process is that you have to apply, you have to check wherever there is an evacuation, and then, so we have applied multiple. So maybe, this year you have not seen too much of evacuation, but there are multiple evacuation which have been applied, and we have applied in different companies also, because we have multiple other companies. We apply it in individual companies where we can set up the project and later on transfer that evacuation to KPI. So rest be assured that evacuation is substantial at our end. We have also applied it. So you will find the growth in evacuation. And evacuation is not a bottleneck for our growth. We have already been growing because of these two factors, land bank and power evacuation. And this will be the growth runners for our business going forward also.
Okay. And my next question is on the Botswana project. So have we started the project work there? Have we done the groundbreaking there?
Your voice is cracking. Ayush, your voice is cracking.
I'm sorry to interrupt, Mr. Sharma. Your voice is not audible.
Am I audible now?
It is sounding muffled to us.
Hello. Am I audible now?
It's still the same actually, Mr. Ayush. Can you please check the connection of yours and please rejoin the queue? In the meanwhile, we'll take the next question, which is from the line of Parth Kotak from Plus 91 Asset Management. Please go ahead.
Hi, thanks for taking my question. Salim sir, congratulations to you and your team for a good set of numbers. Sir, a couple of bookkeeping questions. What is our current CPP order book in terms of rupees crores?
Yeah. That is the only question. So current CPP order book, if you see, we have approximately 5,246 crores of order book on the CPP side.
Okay, perfect. And secondly, sir, we've seen substantial increase in inventory, about a 4x increase in inventory and 2x increase in inventory days. So what's the strategy there?
If you see what is the inventory in our balance sheet is approximately 1,000 plus, right? Crore.
Right, 1,400 odd crores.
Yes, 1,400 odd crore. If you look at the order book that I told you, 5,246 crore, right?
Right.
Hello. So if you see,
Yes. Yes, sir.
the inventory that I am holding is only 40% of, 30 to 40%. So I have to keep on, building up the inventory so I can execute the orders in a timely manner. And that's the reason if you see, we have stocked inventory because we have huge order which has lined up and we have to execute them in the upcoming quarters.
Perfect, sir.
And
Perfect.
I think 30 to 40% inventory is a reasonable thing.
Sure. Sir, if I may just squeeze in one last question, and then I will join back in the queue. If you can give us an update on the Botswana project, that would be helpful.
Yeah. So we have already set up company in Botswana. So we are also, that Botswana company will be a subsidiary of a company which will be in GIFT City, which will be 100% subsidiary of KPI. So we have done all the groundwork for setting up the company. All the approvals have been taken place so that we can infuse funds from, as per the overseas direct investment policies of under FEMA. So all those procedures has been done. We have set up a team over there. We have taken officers over there, and we are shortly be signing the PPAs in Botswana or in the neighboring countries so that we can start working on our first commitment of 500 megawatt by end of December 27. So that is there already in process.
Okay, thank you, sir. I'll join back the queue.
Thank you. The next question is from the line of Ankit Panda, an individual investor. Please go ahead.
Hi, sir. My question is regarding the growth outlook of the company. So, what is the expected growth in revenue and PAT you are expecting in percentage basis this financial year?
So, Ankit, as you know, our Honorable CMD, Sir Dr. Farooq Patel, has on various public domain or on the televisions have given the commitment that we are, binded to grow at a rate of 40 to 50% year on year. So we will try to maintain that growth structure. And as far as the profitability is concerned, we'll try to maintain the profitability. Our profitability is very strong, and we'll try to maintain that profitability by figuring out how the mix of IPP and the CPP will help us to maintain that profitability.
Okay, sir. Thank you so much.
Thank you. The next question is from the line of Mithil Bua from unlistedindia.com. Please go ahead.
Hi, sir. Thank you for taking the question. So my first question is on the grid stabilization.
I'm sorry to interrupt you, Mr. Mithil, but we are unable to hear you clearly, sir.
You're able to hear me now?
Yes, better. Please go ahead.
Yeah. My first question is on grid stabilization charges, which have been imposed in many states. So what is the impact on the CPP segment for KPI?
So can you just elaborate your question? We are not able to understand what are the charges.
So there are grid stabilization charges which have been imposed in Maharashtra. We have heard from multiple sources that this is the add-on to the bills that everyone is getting in the rooftop solar and in the CPP also. So just asking does this have any impact on the CPP segment for KPI?
I'm Dr. Alok speaking. Basically, grid stabilization charges Maharashtra policy newly introduced, and actually we are not doing any project in the rooftop particularly. We are exploring some new policy declared about base compatible of 50% mandatory for under that the policy declared recently. So we as a KP are evaluating the project feasibility in the state of Maharashtra and how that charges and assessing when all these things are calculated, we will be trying to see that what kind of charges they are giving. Grid stabilization charges, we are just evaluating how it is impacting to our project feasibility. As of today, we are not sure how much it will be impacted for CPP sectors, and because in the Maharashtra there is a huge captive charges, so we are sure it can stabilize somewhere else. So we need to see a detailed evaluation for that.
So these charges have not been applied in Gujarat and other states?
No, grid stabilization charges in Gujarat is not there. We are not finding this thing there in other states also. So this policy recently declared, probably we have to see that how it is impacting that.
Okay. So my next question is on land bank. So what is the percentage that we own and what is the least? What is the percentage of that breakup?
See, approximately 800 to 1,000 acres is out of 7,210 acres, which was shown on the in the presentation. 800 to 1,000 acre is something which is owned by us, and the rest all is 26 to 27 years kind of a lease agreement with the farmers or the private party.
Okay. Okay. So my next question is like CPP addition, we have done around 210 megawatts this year. So if we see even last year we did 165 odd megawatts. So how do we plan to scale up this to a very big, because we have a huge capital work in progress. So what is the addition for this year, what we are aiming at?
So you're talking about the CPP, right? Or the
CPP. So this year, I guess we had added 210 megawatts as per your presentation. So how do we scale up such a huge order book which is pending actually? So this year, what is the target?
Yeah. See, if you see, in the CPP segment, we do billing on milestone basis. Whereas the addition of the capacity is shown in the presentation only when we complete the entire project. So there is comparing apple to apple, it will not be right thing over here. We do the business. Sometimes you might see that we might, in some quarter, we might add up a huge capacity because we have just completed that project which was being carried on for almost a year. So there will always be addition gap. But rest be assured, we have strong execution capability and a strong order book in this particular year also.
So how much this year, how much we are planning at like to execute? What is the yearly target that we have from here on?
Yearly target, as I told in the previous question, we are committing to grow at 40 to 50% year on year. So this year also we'll see inshallah. Yes, it will be on the both sides. See,
around 500 megawatts can we expect this year?
See, commitment on the capacity cannot be given, but on the top line or the revenue side, we can tell you 40 to 50%. Because capacity, as I told you, depends upon the completion of the entire project, then only we add the capacity.
Sure. So my last question is on the IPP. So the Khavda project got executed, it got last year, I guess, in 2025. So have we lost on the revenue since, from when did we start the billing and how much revenue did we miss actually like on this?
See, we have already started the billing. We have already started the billing in the Khavda project. The revenue or the billing got delayed. The plant was ready, everything was ready, but the GSS, the government substation, which was in the scope of the GSECL, they were not able to complete, and that's the reason the revenue got a little bit delayed. But with that delay, they have already agreed for extending the PPA terms. So whenever they completed the PPA terms of 25 years, they start post that term.
Okay. So, but our return on capital employed gets impacted so badly, right? Because of this, because of 1 year postponement.
See, not a 1 year postponement. There is, I think 6 to 7 month postponement which has happened. But after that also they are agreeing. So, for example, if they have completed a portion of it, they are allocating that. Okay, fine. Out of the 240, if if they have completed 120, so I can infuse 120 megawatt of power to them, and they will pay for that. So, in piecemeal also they are accommodating us. So, I think, and also at the end they are increasing the tenure of the PPA. So, I don't think there is too much impact.
Okay. So now the whole project, the revenue has started?
Yes, almost started. Some portion of the capacity of GSECL, the government substation, is still pending. So they will complete by, I think, in this quarter, they will complete it. And post that, the entire revenue will start immediately. But at present, we are getting the partial revenue, whatever is complete with.
Okay. So thank you so much. Thank you so much for answering all the questions. Thank you.
Thank you.
Thank you. The next question is from the line of CA Vansh from Serene Alpha Analytics. Please go ahead.
Hello, sir. I'm audible?
Yes, you're audible.
Yes, sir. So my first question is, sir, on this increase in the prices of the inputs that we procure, basically solar modules, steel and copper. So how we are planning to protect our EPC margins because of this input cost pressure?
See, when you talk about the input cost, the major input costs are the panels, turbine, right? Which are, almost 60 to 70% of the entire project cost, wherever we have with material contracts. Okay. So in this input cost, we already, if you see why we have built up the stock to hedge this pricing also. So that is the reason, if you see, we have given advances to our turbine manufacturers, we have given advances to our panel manufacturers, we have taken stock on our books so that we can, curtail, we can safeguard ourselves from the increasing price or the input cost, and that's the reason we are able to maintain our profitability margin also.
Okay. And my second question is, sir, on this promoter pledge. So, could you help us understand that what is the roadmap or timeline to bring this pledge down?
We already, in the last call also, quarter call, we have stated that we already have sanction from State Bank of India, where, around 50% of the promoter shares are pledged. These were long term, long back before IPO, these shares were pledged to give a collateral security for upcoming project. Now, SBI has already sanctioned and given us in the current sanction of 3,000 crore, which they have given for 250, 370 megawatt. They have given the approval for release of pledge once we complete the COD of this project. Within 3 months after that, I think by March 27, all the pledge will be released by the bank.
Okay, sir. And my last question is, sir, on the guidance part. We are speaking about 50 to 60%. But now we are seeing about 40-50%. Could you help us understand why there is a decrease?
So your voice is cracking. Can you repeat the question?
Yes. So I was asking that earlier we are speaking about 50-60% growth guidance, and now we are speaking about 40-50%. Could you help us understand why this decrease?
There, I don't see any decrease. 50 to 60 is there and 40 to 50. So 50 is common in both the places. But if you look at all other companies, I don't think any other companies in the similar segment or any other segment are showing a year-on-year 40 to 50% growth. So in spite of these conditions, we have shown that growth. In spite of the geopolitical conditions, in spite of the slowdown in the economy, we have been able to grow. So I think we should appreciate, in spite of this, we have been able to maintain and give and fulfill the commitment that which we have given.
Okay, sir. Okay, thanks, and all the best for future.
Thank you very much.
Thank you. The next question is from the line of Pratik Giri from Shubh Labh Research. Please go ahead.
Hi, thank you for the opportunity. I hope I am audible. Gentlemen, I have a few questions. Thank you. I have few questions on the broader industry level developments which we have been reading and noticing in the last few months. My first question is on, so probably government has from 4 REIAs, probably now only SECI is the only REIA. I wanted to get your opinion on how this will shape up the RE sector going forward. Now, we saw significant tendering, in 22, 23, probably 24 also. Then, there was some slowdown. So how are you looking at this decision taken by, the leadership of converting 4 into 1, rather converging 4 into 1 REIA?
So this is your first question?
Yeah, that's the first question.
Okay, so let me answer one by one. So thing is like this, you are telling the RE scenario today. So today, you see that what growth is coming in India. Today, there is a power demand is about 6 to 7% CAGR. And today, if you see that non-fossil fuel is the penetration idea of Government of India, they have directed about 500 gigawatt is to be installed. And out of 500 gigawatt, 220 gigawatt only for the solar led, and total that capacity happened about 280 gigawatt non-fossil fuel. So now there is a 54%, there is a penetrations are there as in today. So there is a target to complete the 500 megawatt, about 45 to 50 gigawatt per year. Last year, if you see that last year, solar and wind combination close to 50 gigawatt was installed. So now question is to looking into the peak demand and making the CAGR, and market growth is about the 40 to 50 gigawatt per year is the value addition. So there are 2-3 things are coming. SECI, they are coming with the bidding process for the remaining, that how to fulfill for that. And to support to that bidding, whatever the IPP sectors, they are having your all sort of, the resources, land and P connectivity. So all the bidders are quite equipped to submit that quotations and etc. And yet each state also they are coming for the bidding process. So obviously that growth trajectory remains same, and because of the new technology like base compatibility, green hydrogen and floating solars is also coming. Some of the states like declared as a new that RE destination, like Odisha, they are declared as a RE destination. So obviously to go to that milestone 2030 and beyond, to that 2030, like green hydrogen policy that has been declared, the free transmission charges up to 2035. So looking into this concept, we are pretty confident the market is wide, big, and all stakeholders are ready to fulfill to that the directives given by Government of India. Yes.
Understood, sir. If you can just, add on to the impact of just one REIA, will it lead to, more clearer policy structure, more clearer tendering process going ahead, and clearer connectivity challenges getting sorted out because of only one REIA, SECI? Will it lead to that, or what is your opinion on that, sir?
You see, single REIA has given a clear-cut directive for tendering process and all, that SECI is the single point body today. So they have been given clear-cut that instruction that SECI would be the single point of. Previously there are multiple. So now last for MNRE meeting, it has been very clearly told. So that directive is very clear to fulfill that, that SECI would be taking the leading role for that. So I think that they are now quite equipped, and they are making the all sort of necessary structure, and how to implement, so that implementing the agency in the SECI. And personally, I was there in the meeting, so obviously we are very confident this is the only agency who can take forward.
Understood. My second question is on, the reports which we keep reading about, and not just news sources, even CERC writes about it, about the curtailment of renewable energy, during the peak hours. Probably there's a significant number both in solar and wind. I know this is, beyond our control because this is probably largely a transmission issue. But I just wanted to get your understanding, what is the clarity we are getting from the transcos on, getting this issue sorted out. Because if this continues, probably RE addition will also get hampered in my limited understanding. If you can throw some light there. The transmission issues which we are facing because of curtailment is happening. Yes, over to you.
Yeah. Now, you see, basically, curtailment issues is a much discussed topic today in the centrally. So now they are taking that how to address that curtailment, and at the same time, if that curtailment happened, how to mitigate to that risk of that curtailment. So this is the discussion topic today. So now they are taking how to create a green corridor for the proper power irrigation, proper load flow study, so that whatever the power irrigation is coming, that can be given and properly that utilized by the load dispatch center to each zone, like in WLDC, that NLDC and other things. So it is under the discussion. Mostly topic is coming 2-3 predominant states where the curtailment has been found, and how to address during peak time of generation, both predominant two sources of the solar and wind. So now it is in the discussion how that the PGCL already come to the tendering, that how to create an early kind of power irrigation to address to the curtailment issues. And it is being discussed all the transco and distribution company, not only central CERC, all sort of ERC also there in the participant. So this is a coming time, probably some solution will come, how fast that the project can come. Today, most of these CTU projects, they are coming 28, 29, 2030. So that kind of, that augmentation of power irrigation systems are just a way to create all sort of facilities to address that curtailment issue. So that is a dynamic situation. It will be going like that one.
Understood, sir. But as of now, there's no deadline for the solutions of all this. These all are under discussion and probably will fructify in coming quarters, in coming months. Correct, sir?
Yes, that is the dynamic situation, not is a concrete decision has come from CERC level or some of the verdict has come from CERC level. What kind of process we should follow? Yeah.
Got it. I have few more questions. We'll try to get an opportunity again. Thank you.
Thank you.
Thank you. The next question is from the line of Monish Kumar, an individual investor. Please go ahead.
Good morning, sir, and congratulations on a very good set of numbers.
Thank you.
My question is that what will be the portfolio addition in the IPP segment in the coming first 6 months of the year? And with the increase in the portfolio of IPP, can we expect any increase in margins?
Monish, IPP portfolio, if you see that, we have already won a couple of tenders, out of which, this 250-370 is already, partially energized, and remaining is getting energized. Over and above that, we have already got, financial closure as well as disbursement and working on 150 megawatt wind, which is again in KPI. Other than that, there is an SGVN also, which we have yet not signed the PPA, is expected to come. So the IPP portfolio is expected to increase. And as you know, the IPP segment, gives you a very strong EBITDA. It's around 85 to 90% of EBITDA. So automatically, once the IPP portfolio capacity increases in this overall revenue segment, it will improve the profitability as we go forward.
Got it, sir. And my second question is that the EPC segment also likely to grow. Will the margins stay there, or will the overall EBIT margin of the entire portfolio is going to rise?
See, as we grow the EPC segment, you're right that, the combination has to be seen, that how much EPC segment increases and how much IPP segment increases. That combination are always, we always try to see that, our margins are maintained or they are improved. So we'll always keep in mind that, our IPP portfolio increase to an extent where it will improve our margin, or it will keep the margin stable, because the EPC is also growing substantially. As you are aware that we have already have 5,000 crores of order book in EPC segment also. So the more the EPC segment, the margin will come little bit, will get a little bit strained. So we are increasing the IPP segment also to that extent, so that we are able to maintain this healthy margin what we are earning right now.
Okay, so that would be from my side. Thank you. Thanks a lot. All the best.
Thank you. The next question is from the line of Falguni, an individual investor. Please go ahead. Falguni, please go ahead with the question. Your line is unmuted.
Hello.
Yes, now you are. Please go ahead.
Yeah. Hi to all the team members and management. First of all, congratulations on the strong and very superb numbers.
Thank you.
Thank you, Falguni.
Yeah, my question is regarding cash flow. As the company continues scaling rapidly, how should investors look at operating cash flow generation and working capital?
See, as we are growing, the working capital requirement is more on the EPC business. So we have strong EPC business. So that's why if you see, my working capital has also increased substantially, which has increased our interest costs also. But at the same time, we are able to maintain healthy cash flow. With the increase in the working capital, our cash flows are not strained. So if you see that we have grown almost 100% on the cash flow last year, which were around 200, has almost crossed 100%, and as we have crossed 400 crore on the cash flow side. So we are very cautious, and we see to it that we have a proper mix between the working capital that we are utilizing and the revenue that we are clocking with that working capital, so that our operating cash flows are always positive. At the same time, we have capex and everything, so we keep in mind that our operating cash flows are positive, and the capex comes from our long-term investments only. So that's why we have been able to give this better numbers or a good numbers analysis.
All right, understood. Thank you so much for the great clarification.
Thank you very much.
Thank you. The next question is from the line of Ayush Sharma, an individual investor. Please go ahead. Mr. Sharma, please go ahead with your question. Your line is unmuted.
Yeah. Just wanted to know that, as you previously mentioned, that the Botswana project will be funded by some subsidiary instead of subsidiary for KPI, which will be a kind of new entity. Right. Just wanted to understand that what will be the equity mix. Would that be just like Sunroof Energia, where the 50% holding will be with the KPI and rest of will be, I suppose privately. How that will be done? Just wanted to have a sense on that.
As I said in my earlier answer also, the Botswana company will be a step-down subsidiary of KPI. Because as per the ODI rules of TEBA, 4 times of the net worth of the parent company can be invested into the international or step-down subsidiary. So we are leveraging on the net worth of KPI also, because ultimately it will be a step-down subsidiary, so the consolidation will happen at KPI level. So we will leverage on KPI's strong net worth, which is going to go stronger and then start working on that equity portion, how we'll get in the equity. We have other options of like InvIT and everything, which we might think at that time. But at present, the first commitment of 500 megawatt, we are very comfortable with the existing net worth of KPI, which a portion can be invested for the equity portion. Rest all we already have, in principle, approvals from various international funds for investing into Botswana for us.
Thank you. The next question is from the line of Parth Kotak from Plus 91 Asset Management. Please go ahead.
Hi, thanks for the follow-up. So just one clarification on the CPP order book. You mentioned it's 5246 crores. At the end of the last quarter, if I remember correctly, in the Concall, we had mentioned that we have an order book of about 6,000 crores. This quarter, we have an execution of about 700 plus crores and further addition of about 1 gigawatt, as I can see from the presentation. I was under the impression that order book in CPP would be well above 10,000 crores. If you can just help me understand what's my...
If you see, I'll give you an exact calculations, out of the total capacity in the order book. So out of this 5,426 crore, 1,500 is already executed. And there is another 3,679 which is there. I'm only counting about the bigger order books. There are a lot of smaller orders also. If you see, we have added one bigger one, like we had Aditya Birla, we had Adani Green, we have multiple orders in Sunroof also. So EPB order book, what we are showing is the total new order book plus whatever is left from the previous order book that was pending till now. Okay. In the small order, we have multiple small orders in Sunroof, which we have not factored in over there. Yes.
Got it. Sir, I just want to understand if we are confident. I think in FY27, given the current order book, we will do a 40-50% growth. But post FY27, especially in 28-29 on a higher base, do you think we can still continue to grow at 30-40% on the CPP side?
Yes, because if you see, that there is a huge market. And as we are seeing that, the way the world is moving toward renewable energy, we have substantial order books. A lot of tenders are coming, as Dr. Alok had also specified on, we had a discussion with stakeholders, government stakeholders. So we are sure that, we will be able to contribute, 40 to 50% growth year on year with the existing order book and with the new order book that we'll be taking over in this year and the next year.
Yeah. And also in addition to that, because there are so many tenders that happened, and by what Salim was telling, we have just got order from Adani and other things. Similar, there are so many IPP customers, they need some sort of partner for their execution partner, whereby we are also talking some of the new funnel for such type of activity. So obviously there is a profile where we can really stick into that our target and the thing. There are more than 20-30 gigawatt projects are to be scheduled to be commissioned for next 2 years.
Sure, sir. Thanks. That's very helpful.
Thank you. The next question is from the line of Kartik Sharma from Anand Rathi Institutional Equities. Please go ahead.
Hi, sir. Am I audible?
Yes, Kartik, you are audible.
Hi, sir. Thanks for taking the question, and congratulations on a great set of numbers.
I just had one question on each of your segment, IPP and CPP. So we have a 1.61 approximately WIP in the IPP segment. So is there, can you give us some CODs for the work in progress?
See, I'll give you the CODs for the working progress. Like 250 megawatt, we have, October 26. Another 370 megawatt we have again October 26. Then new 150 megawatt we have November 27. And the other one, there is another 300 megawatt SG1, which we cannot give the COD because the PPA is yet to be signed. Once you sign the PPA, you get approximately 24 months, 18 to 24 months for signing that. Yeah.
Got it. Okay, sir. Thank you. And on the CPP side, from the previous participant, just continuing on that, can you just give us some highlight on as to what realizations do we get on our EPC business?
The EPC business, if you see my, EBITDA on EPC business is approximately 16 to 18%. Sometimes goes depending upon the kind of a project. The project, if there is with material, it might have a different margin. If it is only balance of plant or it's only EPC business without material, then it is a different margin. But combined, you can see that we are, on the EPC side we get around 16 to 18% margin. On the IPP side we have around 85% margin. So combined EBITDA of the company comes at around 33 to 36%.
Yeah, understood, sir. With that, I understand that is the margin, but I wanted to understand the realizations. For example, you have given your, let's say your order book is around like you said, 5246 crores. So how do we convert that into megawatt or gigawatt? Like what is the number or conversion ratio that you use?
See, if I look at this 5246 in a broader sense, it might go up to 2.7 gigawatt. But there are orders which are, with material, but if I calculate the amount of, each order with the capacity will not tie up because some projects are with material, some are without material. That's why. So, but 2.7 gigawatt is something that you can, round about the size of the orders that we have on the EPC side.
Okay, and this 2.7 is including the module procurement and the turbine procurement.
That's right. But 2.7 is the size of the order. In some orders, there might not be module, might not be part of it. In some orders, it might be part of it. So depending on
is there a breakup for that? How much is with and without?
No, we cannot give that breakup in the public domain because it's our business side, So otherwise everybody will come to know what is our pricing and everything, right?
Understood, sir. Fair point. Okay. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Disha from Sapphire Capital. Please go ahead.
Hello. Am I audible, sir?
Yes, Disha.
Yes, thank you so much for this opportunity and congratulations for a good set of numbers. Firstly, sir, on the BESS segment side, I just want to know what sort of growth do you see in that segment and what are the EBITDA margins that we see in these projects?
Battery energy storage system, I'll just give you a brief. This is one upcoming, segment. The reason is that, majority of the solar power has, there is a issue of, FDRE on the renewable energy power. And battery will bring that fixed dispatch renewable energy kind of a system, which most of the, institutions, government institution or the DISCOM want. And margins depend upon different, because at present there are the viability gap funding and everything. So government is supporting this battery energy storage system. I think the margin will be something because a lot of project will be on the rental where you have to provide the rental services of setting up the battery system and providing the power. So margin will not be as lucrative as an IPP or something, but it will be at a decent range. Majority of the, depends upon the pricing at which you win the tender. So exact margin cannot be stated. But I would request Dr. Alok also to give a little bit on the scenario how the battery energy storage system segment is shaping up in coming.
You see, basically why this battery energy storage system are being, the most of the states are considered because of, discipline in power, because mostly the renewable energy today, mostly dominated by wind and solar. So wind is coming on the day little, not inconsistent, but night time is more. Solar, they are coming in the daytime, but night there is nothing. So just to maintain a discipline based on the demand of the state distribution company. So there is a concept of storage. Now that storage comes to the battery energy storage where daytime they can, if the surplus power, day and night, they can store in the battery. And when the state distribution company requires the power, so that is to be discharged. So that is the concept of coming the battery energy storage. So if that battery energy storage is coming just a part of the system, then there's a good discipline would be coming, and that market today is coming enormous. There is all states, be it Rajasthan, Maharashtra has declared that the policy, Gujarat has declared the policy. So that target in gigawatt scale. So if you take the gigawatt scale battery, so that is what the market is coming, that what rate money should discharge depend on the demand curve or the distribution curve when it is your TOD slot, time of the day tariff slots, they will define the tariff by which the battery will discharge. So it is a very, very primitive stage, very, very nascent stage, how the whole system will be working. So this is what we can get, what tariff will be coming. But market is, because today there is a mandatory that base should be a part of the system. Otherwise, renewable energy cannot be compatible with the grid management system. So that is a mandatory requirement for the battery storage.
Right. So what is the current order book that we have for the BESS?
At present, on the BSS or the battery energy storage system, we have two major orders. We have 890 megawatt hertz one, which we have won the tender. Another one is 120/240 megawatt hertz. So these two orders we already have, which are signed. I mean, the end customer is GUNL. So we have got that order book present.
And overall, so how do you see the pipeline and what sort of order inflows are we targeting for FY27?
Most of the biddings are coming, be it from the SECI and all states, they are coming on the bidding process. The pipeline, as I said, it is a pan-India basis. There are gigawatt scale bidding is coming, and mostly KPI is participating most of the bid. So obviously it is because it is a JERC is coming as a mandatory option. So we are in the pathway to participate in the bid, and most of the battery energy storage is coming to bid only. So that is what we are planning for that.
Okay, that's it from my side. Thank you so much and all the best.
Thank you. The next question is from the line of Anil Sarin from K16 Advisors. Please go ahead.
Thank you for the opportunity. Just wanted some clarity in the recently declared results. One, the other income has gone up from roughly 20 crores to roughly 45 crores. Why is that? Second, the depreciation has more than doubled. Third, the finance charges have more than doubled. So if you could throw light on these three aspects.
Okay. So if you see, the other income has increased substantially on account of interest on fixed deposit and the amount that we had got throughout the year, because of which the other income has increased substantially. And if you look at the depreciation portion, we have added assets. So if we add the assets, automatically the depreciation portion increases with the add in the assets. So if you see on the asset side, we have increased substantially on the KPI at a console level. Also, if you see, last year, the asset side was around 2-3, as I told in my opening remark, also, and the asset has almost increased to 5,000 plus kind of a thing. On the finance cost, which has increased substantially, if you remember last year, we had done a QIP. We had done this QIP had raised funds due to which we were net zero at some point of time. During that period, the interest cost was not available was not there, because of which the last year interest seems to be lower. This year we have increased on our working capital limits also, because we have increased on the top line, and due to which the interest cost has also increased substantially.
Got it. Also, one thing that sorry, you were saying something? Please complete.
No. You can go ahead. No.
Okay. So, the debtor days have sort of gone down, but the inventory days have gone up. So if you could throw some light on that.
The inventory days, as I told you, we have a huge order book, and for that, the geopolitical conditions, we know that the availability of turbines, panels will be an issue. So we have infused funds in stocking up the inventory. But 30 to 40% of the order book that I at present have inventory, which is a decent size. Debtor days we have been able to get what we say, the payments on time and everything. So debtor days, if you come prepared with the increase in the top line, debtors have been at the same level. So that's why at a days level it looks a little bit reduced. But inventory, yes, inventory we have added, and as I told earlier in my earlier question also, to cater to our upcoming orders, we have to execute it in a timely manner, and to avoid any delay on account of geopolitical conditions, we are piling up the inventory, and we have added the inventory so that we can execute in a timely manner.
Got it. That's nice to know. Also, your capacity to be delivered. Right now, we are on the IPP side. We are a little shy of a gigawatt, some 964 or something. Please correct me if I'm wrong.
Right.
So where at the halfway mark in the current financial year, fiscal 27, what would this capacity, IPP capacity, stand at? And once we complete fiscal 27, what would be the capacity at that point in time?
996, which was as on 31st March 26. Okay. Today I'm sitting, we have already crossed the 1 gigawatt mark. Because as I told in my earlier answer also that, whatever capacity that we are doing on IPP, we can do it in a phase-wise manner. So we have already got the CIG approvals and everything, and we have already crossed the 1 gigawatt. So total capacity, if I look at, on a DC level, I might go above 1 point with this and the existing capacity of approximately 500 plus and 1 point. So 1.6 or 1.7 gigawatt is something that will be adding up. Majority of which will be this year. Partially, I think will go in case if it is real, but we are planning to get it in this financial year 1.7 gigawatt on the IPP side.
Got it. So correspondingly, what I have noticed, and you may please enlighten me more about it, that gradually the EBITDA margin is increasing quarter by quarter. In the fourth quarter, it went up to 36.6 without counting other income. So can one expect that the EBITDA margin will go further high as the share of IPP increases?
Yes, and that is what is our game plan also, right? And increase the IPP portion in the overall mix of IPP and CPP. But at the same time, if I keep on increasing my top line with CPP also, because I have to increase that business also. So we are sure that our EBITDA will grow. I mean, if I reduce the CPP, automatically the margins will grow, but my top line will curtail to some extent. But we don't want that. We want the margins to be as we have done. We need to be maintained. We don't want it to go down or increase only. But at the same time, CPP business should also increase.
Okay. And now this is more of a broader industry question. See, the Indian government has recently got a scare and a shock from the Iran war situation. So one would imagine that there would be better appreciation of renewable energy. Do you see any change in the way policymakers are behaving with you in terms of wanting greater renewable energy, and thereby does that translate into better business opportunities for you? Not to mention, I mean, you anyway are growing very, very well, but as a result of the Iran-US conflict, any changes in the environment that you are seeing?
Yes, sir. Now this is a complete paradigm shifts are happening in India because we are mostly dependent on the fuel import in the economy. So now there's a clear-cut directives from the central government. You should use maximum non-fossil fuel-based resources, which means renewables is coming in the very much limelight. So now this government authorized MNRE has been taking a very strong step that how to utilize and how to potential mapping very fast, so that whole demand of India, which is this will be hitting up to the 300 megawatt per day, something like that. Your demand is coming. So peak demand today is coming about 256 gigawatt, and this is expected about 300 gigawatt. To match that demand, there's a clear-cut directive, maximum renewable energy has to be explored. So be it rural or urban or just any kind of that industry, it is to be gone through a project by renewable energy. For example, if it is steel industries, they need in their hydrogen. So previously it is the coal based. Now they are clear-cut directives, it is to be green hydrogen based. So now green hydrogen, that obligation that is driven by the policy, it is been declared already. By 2035, they have given certain relaxation in the transmission charges so that all industry for green hydrogen, they can go for such type of industry. Number one. Number two, if it is agri-volt, so all kind of agriculture, where the maximum diesel, etc. Now that government is declaring, so you have to go for the solar installation. So that market is coming more than, if you ask me, that market is more than 1.2 gigawatt. 1.2 gigawatt market is there short term, and long term it should be much more gigawatt scale, even for the agriculture. So if it is a all captive projects, all kind of that industrial use, it has been given directives, at least they should go for the renewable energy initiatives, and government is not for there. So what about the renewable purchase obligation? They are coming a policy, it is to be mandated now. All company, they should go for the, this is their demand to meet is obligatory by the renewable energy only. So it is to be regulated by the state distribution company and also state regulatory system. So these are the few changes being adopted by the government of India and state government. So with that hope, we are expecting being a KPI, it is a good platform for an opportunity to take it forward.
Great. Thank you. Just one follow-up, one question on that. In fact, I have two. I'll just say with the first one first. That, the operating cash flow has improved quite well, actually. It has more than doubled this year, which is a positive development. As you go ahead with greater and greater IPP, what will happen to the operating cash flow and the OCF flow through? Today, roughly, whatever I can see, around 44-45% of the declared EBITDA has been delivered as cash flow in the hands of the company. So, if you can comment on how the cash flow will evolve as IPP becomes more dominant, unless, you are saying that CPP also is keeping pace, so the balance will not change. But just wanted to know, good thing, OCF has gone up, but what is the outlook on OCF?
Yeah. So we have to understand that IPP is a segment which gives us a very strong cash flows. Okay. One is because of its strong EBITDA. But at the same time, IPP does not require any working capital. So increase in IPP will have very, it can have a positive impact on the cash flows because it adds to the net cash accruals but doesn't take anything in the working capital. Just like CPP, it requires working capital. IPP doesn't require working capital. So you can understand if there is a working capital, automatically your cash flow from operations get hit if there is a lot of, working capital which is utilized. Here, it is clear that IPP increase will increase the cash flow and will have very good positive impact on the overall operating cash flows of the company. And that was the reason, one of the reasons for having this good numbers on the cash flow side also.
Okay. And this, on the BESS side, BESS, BESS side, is the profitability more or unchanged or lower than your regular business of IPP and EPC that you do?
See, regular IPP business has got an EBITDA of around 85 to 90%, which we might not see, provided, if there is a very good BESS project which has come with a very good, pricing, it can give up to that extent. But at present, we have not seen any BESS project which can give up to 85 to 90% of EBITDA margin.
Okay. And in fact, in this one, so you will be having viability gap funding. So it seems that the battery prices haven't come down enough that on its own it becomes a viable project. So including the VGF, what margins can one expect in a BESS project?
See, I told you, the expecting margin because all the tenders have been floated at different pricing. VGF is also at different. Somewhere it is, 18 lakh rupees per megawatt, or somewhere it is 27 lakh rupees. So different, tenders have been bid at different prices. So, speaking about the margin, yes, there is not a very strong margin, but there are margins depending upon at what pricing the projects have been taken and how they will get executed. Because again, the battery and technology, whether you are using lithium, whether you are using sodium, so that is also dependent upon the technology that you might be using and the pricing at which the batteries are taken.
And these are the same 25 years?
No, batteries have 12 years kind of a PPA.
Okay,
Just hold on. Mr. Alok.
Just your question about this battery storage, what Salim was telling, yes, that is very much correct. Now you see, VGF can be a long-term solution. When that India is driving towards, 250 gigawatt hour by 2030, so whatever VGF first has been declared, later on, there should be some facility management to be created in-house in India, and most of the companies doing like that way. So when this volume comes, obviously, there should be cost reductions. But as on today, the scenario, what he told Mr. Salim, that is the situation today.
Okay. No, thank you. Thank you, sir. But what would be the IRR of a BESS project? Because, and what is the IRR of an IPP project?
Your sound is not very clear.
Okay, let me say again. The equity IRR of the regular IPP projects, in the past, you've mentioned, I think it is 15-16% or so. Maybe it is higher, I don't know. You can please clarify. But compared to that, what is the equity IRR of a BESS project?
I think we are losing half of the words we are not able to hear.
Your voice is breaking.
Is there any issue at our side?
Can you hear me better now? Can you hear me better now? Hello?
Yes.
Yes, sir.
Yes,
this is
yes.
better.
Is it better now? I will repeat my question.
So it is cracking in the middle. I mean, we are not able to hear the entire sentence. We are able to miss out on some words. So that.
Okay, give me one last chance. Otherwise, we will switch. We can go to the next speaker.
Yes, we can. You can just join the queue.
Mr. Sarin, you are audible, sir. Please go ahead.
Okay.
I am audible, but the participant who is asking question, we are not able to hear that.
The participant's name is Mr. Anil Sarin. Even sir, right now he is audible. Let him go ahead.
No,
with his question.
even your voice is a little bit. I mean, it's cracking.
Oh, okay. One last chance, and then we can move to the next speaker. If you can, please give me a chance.
Still there's a problem, sir. I think you can communicate to us and we can revert to you.
Mr. Sarin, I believe the management is unable to hear us. Can you please rejoin the queue or you can communicate with the management?
Sure. Please. All right.
Thank
next
you.
speaker. Yeah.
We'll move to the next question, which is from the line of Ashish Rampuria, an individual investor. Please go ahead.
Hi, Salimji, is my voice audible to you?
No, I think even we are not audible. I mean, the operator itself is not audible properly. There is some gap between the sentences that we are in.
Let me please check the connection for management. Just give me a moment. Ladies and gentlemen, please stay connected.
Hi, Salimji, Ashish here. See, Salimji, and I've been seeing the company for quite some time. Farooqji historically used to talk about 70-80% CAGR till FY30. Then it became 60-70. Last 2 quarters, he was speaking 50-60% CAGR. Now, last 3-4 days, his interviews now, he started talking 40-50% CAGR. I'm all talking till FY30. Is there a structural slowdown that you all are seeing? Hence, this forecast of growth is reducing. If you can just throw some light on that.
Let's see. CAGR, what we have shown, it's around 50-60 or 40-50. We are going at a very strong pace. We already said that. Okay. Now, if you look at if I ask somebody, you tell me companies which are growing at 40 to 50, 50 to 60% in the renewable sector. There are hardly any company which has grown at this rate. So we are going at a rate. It also depends upon the sector. If the sector, if you see what growth it was giving earlier, the sector growth has also a little bit, curtailed. But at the same time, we have not curtailed too much. We have grown at a very good rate. We are expecting to come at a 40 to 50% rate, growth rate in the upcoming years also.
Got it. So, fair enough. I'm not questioning whether it's slow or I'm just trying to understand if I look at the last 2-3 year journey or even longer journey, we were speaking of a higher CAGR every year, and I'm talking of a longer CAGR, I'm not talking of 1 year, and we are sort of now highlighting a lower value, which is okay because
That's what, so at that time, if you see, the sector was very promising at that time also, right now also, but with the geopolitical conditions, you have seen some kind of, what we say, less acceleration, I would say, I won't say slowdown, it's a less acceleration compared to what acceleration was there earlier. So we are also in line with the same acceleration. We are growing in the same pace. It's only that the overall, if you see, we might go at more than 60 to 70% also, depending upon if the sector gives you that support. So it has to be also the geopolitical condition to be taken into consideration while we look at the sector. Because at that time when we gave that CAGR, the sector was very promising and very booming. Now the acceleration to that extent has not been in the sector. That's why if you see, we are also growing at the same pace where the sector has, slowed the acceleration. But we are, again, I'm reiterating this for my shareholders and stakeholders that this is something what we have, achieved over a period of time, and we are maintaining that growth strategy or the growth momentum which we have shown over a period of time.
No, fair enough. So currently we are saying 40 to 50% CAGR till FY30.
Yes.
Is that the understanding? Fair. Okay. Secondly, if I look at it also last 2 years in the investor presentation, we are seeing we'll go to nearby states, right? We have highlighted.
The voice is cracking.
Is it audible? Is it better now? Hello?
Okay.
Can you hear me, Salimji?
Yes. Yes.
So I think we have been talking about nearby states for quite some time. And obviously, I think I saw the recent order of Rajasthan. But in your investor presentation, we are highlighting Odisha, AP, Telangana, other states. Where are we on that journey? Are we going?
Not able to hear.
Hello.
Again, voice is breaking, operator.
Sir, actually, Mr. Rampuri is clearly audible to me.
Madam, we are not able to hear you. Neither you also, we are having issue. Your voice is also breaking.
Okay. No, it happens all the time. No worries. See, the nearby states, Salimji, we have been talking it for quite some time, right? And I think I saw some progress on the Rajasthan front. What about other states, right? When do we expect that we will be able to venture out to those states?
You see, the thing is like this. Now, today we are venturing into Rajasthan, as you said you very correctly. We have already entered some of the states like Karnataka. We have already taken some of the projects some of the resources we have taken. So we'll be doing some projects there. We are also participating in the state of the Odisha for their bidding process of floating solar initiative. So these states, when they are coming on the bidding process, we are in the queue to participate for there. So in a nutshell, apart from Gujarat, we are there in Rajasthan, Odisha, and Karnataka, and we are now planning to enter into the MP also, and Maharashtra.
Got it. Maharashtra was my question, right? Because I think Maharashtra has announced a very strong focus on renewables. We entered or won a project about 2 years ago, but I am not seeing too much traction in Maharashtra. Any reason why Maharashtra was not a focus for us?
You see, Maharashtra now, very recent, they have declared with the base compatible projects. Now they have declared more than 100 kilowatt, just any project to be based on the base. So now there's a lot of tractions coming in the Maharashtra, particularly those projects who need the round-the-clock operation, data centers and all. So there are some policy also declared just in favor of renewable energy. We are getting a lot of traction. At present, we are in the search of good resources because the renewable energy should come always in the grid connectivity and land and etc. KPI is already doing some of the searching for all sort of research, very advanced stage. You will be getting very fast, hearing from our side about some Maharashtra projects are happening.
Got it. And any color on our order pipeline? I think reported order pipeline value is 4,500 that's already there, won. But in terms of bids that we have placed, any color on that?
So on the bid pipeline, we have more than 4 to 5, I can say, megawatt bid which we are, trying to participate
in. You mean 4 to 5 gigawatts, right?
Gigawatt, yes.
4 to 5 gigawatt overall bid.
And what should we expect as in terms of our win ratio for these 4 to 5? based on
In
historical?
the past, our win ratio has been at 75%, but going forward, we'll be very selective. We'll select high margin kind of tenders, and we'll try to gain as much as the faster execution kind of tenders. So we'll focus more on that.
Got it. And Botswana, any update? Have you moved under 500 megawatt? Have you got that comfort from the,
I already answered the question that yes.
Sorry, I joined a bit late. I will hear back. No worries.
Not an issue. But yes, we have already moved ahead substantially. Companies are formed. It's a step-down subsidiary of KPI, and very shortly you'll see the PPA getting signed, and we'll be starting with our execution.
Got it. Thank you. Appreciate it, and all the best.
Thank you.
Thank you. The next question is from the line of Monish Kumar, an individual investor. Please go ahead.
Thank you for the follow-up, sir. My question is with respect to the IPP EBIT. Hello?
Yeah, please carry on.
Mr. Kumar, please go ahead with the question. We have lost the line from Mr. Kumar. We'll move to the next question, which is from the line of CA Vansh from CA Alpha Analytics. Please go ahead.
Thank you for the opportunity again, sir. I have a question that this BESS revenue, when will this start contributing to our top line, by FY27 or FY28?
You're talking about the IPP project, right?
This BESS, BESS, battery energy storage.
BESS, I think, we'll complete it in this financial year most probably, and next year, 27, 28, we'll find the revenue getting dropped into our, top line of Sunrock.
By FY28, right?
27, 28, yeah, financial.
Okay, sir. Thanks.
Thank you. Ladies and gentlemen, that was the last question for today. With that, I now hand the conference over to management for closing comments.
Thank you. And now our whole-time director, Mr. Sohil Daboria, he will in a brief on the operational part of our business. Yes,
Thank you, Mr. Jain. Good afternoon, ladies and gentlemen. I would like to take this opportunity to highlight how we see our growth trajectory in the coming years. We are now growing at a strong pace of 40 to 50% year on year. Our team is fully equipped and well prepared to support this growth journey. We are on track to achieve our 10 gigawatt target by 2030, and we are confident that we will reach this milestone ahead of schedule. Our vision extends beyond India. We aim to expand globally and develop renewable energy projects in international markets, leveraging our proven execution capabilities and industry expertise. At the same time, our strategic focus is to increase the share of our IPP business, which will help us build a stable annuity income stream for the next 25 years. Thank you once again for your continued trust and support. We remain committed to creating long-term value for all our stakeholders. Thank you. Over to you, Mr. Jain.
Thank you. I would like to convey my heartiest thanks to all the participants for their active participation. I hope that we have been able to reply to all your queries to your fullest satisfaction. And once again, we look forward to your continued support and confidence in the company and company's operations. Thank you very much.
Thank you. On behalf of Share India Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.